Revenue Authority has long been reviled for being an overbearing, pompous and aloof body that is insensitive to the needs of the populace. This opinion has shaped the attitudes Kenyan have for KRA, which is that the body is a tyrant organization.
Over time, the KRA has refused, either by design or by default, to change with times. Reason why Kenya cannot do it to date, perhaps is a deliberate attempt to cover up for corruption.
One aspect that is being cited is the tax dispute resolution mechanisms, which include the local committee, the VAT tribunal, the customs tribunal or excise tribunal. PKF says these bodies have lost public confidence since they are populated by people without a clear grasp of tax laws. Moreover, if a taxpayer loses an appeal at the tribunals, they must pay the full amount of taxes in dispute to KRA before they can file appeal at the High Court, something they say denies the taxpayer their rights to justice.
A client is assessed 600 million shillings, which is fictitious sometimes, which is out of misinterpretation of the law. And for him to get justice, he is required to pay the taxes upfront.
The analysts want the taxman to enter the 21st century by embracing the use of technology to scale up interaction with taxpayers and also to increase its efficiency in collecting taxes. But perhaps the reason for this underperformance has been the perennial underfunding of KRA. Last year, Treasury paid KRA 10.1 billion shillings, accounting for 1.5% of the national revenue. But this was much lower than the expenditure of 12 billion shillings. The decision to increase the commissions to 2% could therefore spur the needed reforms in the authority. It's time for a new way of thinking at KRA if they want to make a break from the past. These new technologies could change the fortunes of the taxman, increase compliance and win KRA some much needed public support. Adelaide Changole, KTN Business Today.